Hey guys, and welcome back to the Maximilian channel, and in today's clip we're going to be taking a look at what sort of tax liabilities you could be facing on your FTMO payouts. Now you have two clear options in the UK. You can either register as self-employed / as an individual that declares that additional income, or you can set up as a limited company and run your profits through there. Now if you haven't watched my previous FTMO tax video, I'll link it up here, and in this one we focus purely on you being an individual and just declaring it on top of additional income, whether that's you working a job alongside or whether you've decided to take FTMO as your sole income, but either way that's as an individual, not as a limited company, so be sure to go and check that out. Now in this video we're going to be focusing purely on one of the other options, which is setting up as a limited company and then exploring what sort of deductions you could expect if you went through this route. And as with the other video, we're going to use the same examples, so setting up a limited company, but we're going to do it in two scenarios. One where you are still working a full-time job and you're doing this alongside, and also if you decided to make FTMO your full and sole income. So just to confirm and just as a heads up, this video just focuses on tax on FTMO and as if FTMO were your only trading income. Now the tax is different on your personal trading accounts, and there will be a video following this on that in particular. But just for now, we're going to focus purely on FTMO because that is what's been requested the most. Now I do want to give you the most value as possible in this one, and this has taken a long time to make and put together, so be sure to watch it from start to finish just so as you make sure you understand everything that's inside of it. Any questions you've got, put them in the comments below, and of course you can pause and rewind it and then rewatch it as many times as you like to let it sink in. And now just before we get started, as always, if you are enjoying the content, please, I'd really appreciate it if you could just smash that like button, hit the subscribe button, and then make sure you click on alerts so as you're alerted to when I post my next video. And of course, needless to say, I'm not a tax professional or a finance professional. My videos are only for entertainment purposes only and just sharing my opinion and perspective on all of this stuff and what I found out to date. Hopefully this helps you save some of the legwork that it would take to find it out for yourself, and it's something that you can take forward in your trading journey. But as always contact a finance professional before making any final decisions. Okay, so let's get to it. FTMO and running through a limited company. What sort of deductions could you expect through this route? Now, if you are considering the limited company route, there are plenty of advantages and disadvantages to running your own limited company, and this will depend massively on your own financial situation and what else you're doing in terms of work. The situation then also thickens if you are trading on a personal trading account as well, but obviously that tax we'll cover in a separate one, and I can combine FTMO and personal trading if that is something that people want as well in a further video. But for this video, we're going to take a simplistic look at a limited company and what basic sort of deductions you can expect and account for if you do register your FTMO profits through your limited company. Now, just a couple of things as well to bear in mind with a limited company. It does cost you to actually register one in the first place, and your accountancy fees are going to be more in terms of the amount of returns that they're going to need to do, and the fact that they're going to be more complex than just doing it for an individual. But that aside, we're just going to look at some examples as we did in the previous video to give you some context on what sort of liabilities you could be in for. Now, a couple of key things to remember through a limited company is that it is seen as separate to your personal affairs, well in most cases anyway, so therefore you will be eligible for company or corporation tax in the UK, and this will be paid on all profits after expenses. Yes, of course you can expense things like equipment and subscriptions and whatnot, or any cost of business. We're not going to go into that right now, we're just going to give a simplistic overview of your profits from FTMO and what sort of tax you'd pay without any expenses. So just to reiterate, in the UK corporation tax is 19%, and you will be charged this on any company profits irrespective of what you're earning personally at this stage. Now, what a lot of people forget is this isn't the only tax you're going to be taxed on from your FTMO payouts, because you will have to pay personal tax as well once you withdraw it out of the company. And it will depend on how you pay yourself and your personal situation as to how much tax you actually pay. Now, just a quick note before we move forward, and this is an important one for if you're going to be a successful trader in FTMO, especially when you're trading the larger accounts. For any limited company in the UK that's expected to turn over or is turning over 85,000 in a given tax year, you will need to register yourself for that. So to put it into context, if you're expecting to get payouts from FTMO in the region of 7k on average per month, then you will need to register. Now, your accountant can help you in terms of invoicing, but FTMO are based in Prague, so therefore you will be invoicing the Czech Republic. So as they are an EU member state outside of the UK, you don't need to charge UK VAT on your invoices. But it's worth noting that if you are VAT registered, you can still claim back the VAT on the expenses incurred in terms of providing your service, i.e. the VAT on the expenses that we mentioned that you could use before. Now, the Czech Republic VAT system is actually called DPH, and essentially in this scenario, as you're providing a service and not goods, you aren't required to charge UK VAT on your invoices to Prague. And with this in mind, FTMO in Prague will have to deal with their own VAT liabilities, and usually this is through a slightly complex reverse charge procedure. But obviously if you want to find out more about this, go to your accountant and get him to explain it, because we don't want to spend too much time dwelling on Prague tax law. Okay, so let's run through two examples as we did in the last video, exactly the same examples. One where you are working a full-time job alongside trying to trade FTMO and you're doing your FTMO through your limited company, and the second option being that you've just chosen that FTMO is going to be your sole income and you're running it through your limited company that way. Now, with these examples, it's worth noting, I'm just going to assume that we're going to take out all the profits each year that you've earned, that you haven't expensed anything and you aren't holding any money in the business over each year. Of course, it's completely down to you what you do, but I just wanted to give a more simpler example so as you can get your head around what a conservative figure would be in terms of deductions. Now, you will of course have to register for self-assessment in this case, as the majority of what you'll pull out of this company won't be in salary, it will probably be within dividends. So you will need to register for self-assessment and you will need to declare all of this money at the end of each tax year. Now, option one, let's say you're working a salaried job, like a normal job, let's say for a 30k salary, and that you've earned 70k in FTMO payouts in the same financial year. So as we mentioned in your limited company, you've earned 70,000 from FTMO. Now this, in theory, is all profit because, as I said, we're not expensing against it, so you would be immediately eligible to pay the corporation tax of 19% on that 70,000. Now that 19% will equate to roughly 13,300. This will leave you with 56,700 left in the business after taxes that you will then pay yourself. Now, I won't go through all the different ways that you can pay yourself, but if that is something you're interested in, then feel free to comment below and ask me to make a video about it. But in this scenario, we'll go for what I believe to be the most efficient option, which would be to withdraw the profit as dividends at this stage. Now, dividend tax is different to income tax. I mean, I guess it's a type of income tax if you like, but the rate of dividend tax that you pay is based on the income tax threshold that you're currently sat within. So the government allow you 2k in dividends to be completely tax-free, and then from that point, you would fall into the following dividend categories. Now, dividend tax and income tax are completely separate, but what dividend tax you pay is based on what income tax threshold you're in and how much you've got left in each of those particular thresholds. Now, if you're a basic rate taxpayer, and that essentially means if you earn anything up to around 50,000, then you would owe 7.5% in dividend tax. If you're a higher rate taxpayer, and that's if your income is in between 50,000 to 150,000 pounds, you'd pay the higher rate of dividend tax, which is 32.5% on that amount. And if you're an additional rate taxpayer, and that means that your overall income exceeds £150,000, then you'd pay 38.1% in dividend tax. Now, of course, you pay those different amounts of tax only on the money that falls within each of those categories, similar to income tax. So, stay with me. Now, in this example, you're earning 30k salary through a normal company, which means you've got 20k between the 30 that you're earning and the 50k, which is the range for the basic rate taxpayer. Now, this means you've got 20k that you can withdraw in dividends that will be taxed within that bracket, which means you'll be paying 7.5% on that amount. Now 2k of that is dividend tax exempt, as we said, the government give you that 2k tax free. So this leaves 18k to be taxed at the dividend rate of 7.5%. So 18k taxed at the 7.5% dividend rate would be around £1,350. Now after this, you have a remaining 36,700 to pay yourself. So this 36,700 would fall into the higher tax bracket, which means paying 32.5% dividend tax on those dividends. And this would equate to £11,927.50. Now, it's worth noting that dividends are exempt from national insurance, so it's only dividend tax that you owe on this. So if we add the basic rate dividend tax and the higher rate dividend tax that we've just discussed together, your total deduction is £13,277.50. So overall, your take home is around £43,422.50. So that is what you'd earn from the 70k. Now that works out at around a 38% reduction. Now, if you'd watched the first video, if we applied the same scenario as an individual, you'd be looking at just over 40% as a deduction. So in this scenario, you've actually saved yourself around 2%. But just bear in mind, obviously it varies depending on how much salary you actually paid, and then you'd be in different brackets. So in this example alone, it is more tax efficient in theory to go through a limited company, but this isn't taking into account all the additional costs of the additional fees in accounting and also the fees of running the company and setting it up, etc. As I said, and I'm going to keep reiterating, there are so many different ways to run your limited company, but I'm just trying to keep it simple just so as you get a broad idea, so as you know almost like a worst case-ish scenario in terms of what you may have to pay. Okay, so let's move on to option number 2, and this one is where you've taken FTMO as your sole income and that you're running it through a limited company. So we'll do the same, i.e. without expenses and all the other jargon, and we're going to do it based on you earning 70,000 from FTMO payouts. Now, unfortunately, dividends aren't seen as a taxable expense in a limited company, unlike a salary, in which case you can expense that against your business and is seen as a business cost. So that's why in the previous example, we weren't going to pay a salary out of the business because you're already being paid a salary from your other job at 30,000 in that example, and therefore your limited company, if you were to pay yourself a salary, would have had further liabilities in terms of employer national insurance contributions, and you as a person would also have had to pay further national insurance contributions, whereas dividends are exempt from national insurance. But in this example, as you've got no other income, it makes sense to pay yourself a tax-efficient salary through your limited company, and this way you can expense it against those FTMO profits as well. Now, you have to register your company as a PAYE employer because all of these details get sent to the HMRC so they can see how much you're earning on the books through a normal taxation system. And you will also still need to register for self-assessment because the dividends that you'll be taking out is going to be the vast bulk, and there you have to declare them on your self-assessment each year. And so this way you can pay yourself a small tax-efficient salary. Now, I'm not going to go into depth right now because I know that I don't want this video to drag on. I want to keep it as simple as possible, but there are various reasons as to why this figure is the most tax efficient salary to pay, and the reason why your company and you won't have to pay any national insurance contributions. But if you do want to see any more about that, then you can comment in the section below and I can maybe make a video about it. But for now, at the most efficient rate, it would be around £8,784 per year. So this works out as a monthly salary of around £732, and this can be expensed. So you can deduct that £8,784 from the 70,000 FTMO payouts that you've earned as an expense. So once you've deducted this leaves £61,216. Now just to note, the salary will need to be paid each month because HMRC measures salaries as per month that they're paid in terms of what their tax liability should be. If you overpay the salary part each month, then you will be open to further liabilities. Now, with the £61,216 that you've got left after you've expensed that and paid that to yourself as a salary, you will be eligible to have to pay the 19% corporation tax on this, as this is your remaining profit. So on the 19% corporation tax, this works out at £11,631.04. Now this leaves you with the remaining £49,584.96 to pay yourself. Now this again would fall most efficiently by paying this in dividends. Now in this example, given the only other salary you've earned is the one that we've just discussed at the £8,784 per year, you still have a remaining tax-free allowance of about £3,716, which is the difference of the bracket of the £8,784 up to the £12,500 0% tax bracket in the UK. You then have your 2k tax-exempt dividend allowance, and so this would take you to a further £5,716 of tax-free income. So we deduct this off of the remaining £49,584.96, and that leaves you with £43,868.96, which will be the taxable income. So your total income up until this point would be £14,500. That's your salary, the remaining tax-free income, and also your 2k dividend 0% allowance. You have £35,500 left in the basic rate dividend tax threshold of 7.5%. And with the 7.5%, this works out at £2,662.50. This would leave you with a remaining taxable income of £8,368.96. And on this, you'll need to pay the higher rate dividend tax on this at 32.5%, as this will push your income to exceeding £50,000 overall. So the 32.5% dividend tax on that is equal to around £2,719.91. Your overall personal tax bill, not the corporation tax, but your overall personal tax bill would be the £2,662.50 that you paid in the basic rate dividend tax, plus the £2,719.91 from the higher rate dividend tax. So this equals a total of £5,382.41. Now overall, taking into account your corporation tax deductions and your personal tax deductions, this gives you a grand deduction of £17,013.45. So this will give you a take-home amount after all taxes of £52,986.54. And this equates roughly to a 24.3% deduction overall. This is very marginally better than if you did this as an individual, but obviously this isn't taking into account the additional costs as before of the additional accounting fees and also registering the company and all the rest of it. So in short, there isn't much difference between an individual earning $70,000 on an FTMO account or doing it and going through the rigmarole of setting up your limited company. Now, of course, as I said, there are loads of advantages and disadvantages to a limited company, and it does vary depending on how much money you earn and how you earn it and what you can expense. But this was just a very, very simple example so as you get an idea of the sorts of liabilities that you may be open to, because a lot of people don't consider them all. I've taken figures that I think on average a retail trader and somebody that isn't, completely pro are going to be earning if they're on a good year. So they're the reason that I've chosen the figures that I have. But if you do want to see more advanced calculations and different areas we can go to, then comment below and I can put together a more complex video. So to simplify and give you a brief summary, the comparison between if you're working a job at 30k salary and you've earned 70k in FTMO payouts, if you declared this as an individual, you'd be open to around 41% in deductions. If you went through your limited company, you'd be open to around 38%. So there is a minor benefit in doing it through a limited company in this particular example. Now in the second example of if you were using FTMO as your sole income, if you declared it as an individual or if you went through a limited company, you'd be paying pretty much the same in deductions overall. Now, of course, this is where you get an accountant to help you with all the filing, with getting your company up to date, updating company's house and all the rest of it. So I do hope this video has provided you with some value and some context in terms of what you can expect and a broad understanding of what the limited company option could provide. As always with my videos, I'm not a professional, but I do dislike it when people put up a tax video, they give you no explanation, just say go get an accountant, and it's all clickbait. So I hope that I've given you some reasons as to why to get an accountant and also some things to expect with this limited company setup. Now, if you have enjoyed the video and you are enjoying the content, please just smash that likes up button. It really helps me with the YouTube algorithm, so as I keep making these videos and so as I can hopefully keep providing value. So make sure you hit subscribe and hit on the alert so as you know when the next one's posted. And on that note, there are a couple of videos in the pipeline at the moment. Some people have requested how I manage personal finances, some people have requested how I backtest, and also I want to do the additional video on personal trading accounts, and potentially if people want it, the merging of if you're trading FTMO and trading your own personal account and all the stuff around that. So stay tuned over the coming weeks because all of those will be coming out. If you've got any comments or suggestions, please whack them in the comment section below, where you can find me on my Instagram at Matt2Million. I do try and get through all of the DMs throughout the week, so don't be shy, feel free to contact me and I'm happy to answer any questions. But if I don't see you before, I'll catch you on the next one and have a great week. Take care.